Awesome. So like I said, we're going to be doing trade recaps today. Took 3 trades, 1 winner, 2 losers, pretty much a flat day. Both of the losers were very, very small and manageable. And then we're going to talk about this setup right here. We can talk a little bit about risk management, and then we'll go from there. So the very first trade that I ended up taking was on QQQ. I tried QQQ calls. And the reason being, if we go on over to QQQ, we just go ahead and delete this, remove that. We can see that we had Friday's low at this 375.20 point. So typically daily lows or previous day's lows, highs, close, or intraday support and resistance levels that we want to know about the following day, right? So we have 375.20 and we have 375, which is psychological support. Remember, intervals of 5 are psychological support and resistance for SPY and QQQ. So 375, 380, 385, 390, etc. Those are psychological areas. Plus, we bounced off of a fib over here as well. So that's why I was interested in a possible retest of this 375.20 down to 375 for a bounce. And then if we started breaking 375 with weakness, that's when we would get out of the trade. So for this, I only had a fourth of my position because I started the position at 375.2. You guys heard me say I'm starting my position here, and I will add if we get confirmation at 375. The reason I wanted to add the position, start the position here, was because there was a very big move going down into the level that I was interested in for a bounce. So as price came down and hit 375.20, that is when I ended up getting long. And the contracts actually moved a very good amount just based off this pop right here. It was a 60-cent pop, or what is that? 50-cent pop, right off of that level right there. Obviously, I was looking for a larger move. And as it came down to 375, there was nothing about this candle that confirmed, hey, I should add more size to my position. So I was only in a quarter of the position. As it started to fall below 374.8, it was very quick to flush to the downside. So I took a very small loss on this trade. So that was trade number 1. Trade number 2 was actually a scalp that I ended up taking on SPY, and it was down here. So the reason that I ended up taking this trade down here, and again, this is a different setup that I've been playing with. I went full size with this just because it was a scalp. Pretty much what I was looking for was a quick little dump and then to hop out a majority of the trade. So what I ended up taking was this setup right here. So we had this nice little FVG, huge dump to the downside, and I saw price came back up and it started rejecting the FVG right here. And as price started to come back up again, that's when I ended up getting short. And literally, as soon as I entered short, it dumped and I was able to secure profits on about 70, 75% of the position. And then I saw price started spiking back up to the upside with heavy volume. So I sold the rest at break even. So that was trade number 2. Little higher risk of a trade. And again, I was ideally looking for the scalp to the downside, and I wanted to see that low a day, but I was locking in profits on this way down. So very quick scalp on those contracts. So that was trade number 2. And then trade number 3 that I ended up taking, again, was on QQQ, was actually puts as we started coming up into these retracements up here. So what I was looking for was a potential inverse ABCD, and I was watching the 61.8 and the 70.7 up here. So typically what I like to look for is for price to break through and reclaim the opposite side. Originally, I was interested in this 50% fib. However, it never confirmed an entry. Therefore, I did not take puts, right? So as I was watching this, let's go to a 1-minute time frame. It pretty much just broke right through the level. I wasn't seeing any weakness behind this move, right? Or any strength on this sell-off right here. So I decided to wait a little longer. Again, this is why being able to read the tape and being able to read bookmap is very important, because in my opinion, there was no reason for me to get short here or here at this 50 or 61.8. So I started looking at higher time frames, 2-minute, 3-minute, right, as we broke through here. And then, you know, some people might have saw this as a reason to enter. The reason I didn't like it is because when we popped up, we sold off like very quickly. It was like a split second and we were right back down here. I didn't necessarily like that. I wanted to see more price action develop. And again, wasn't seeing any weakness in the overall price of QQQ. So it started to push up to the upside, started holding this level, and then I started looking at any other time frames because this was a relatively large move back up for this price swing right here, right? So we talked about this on Friday when we ended up taking, I forget what we took short on Friday, but it was a nice trade. I think it might have been SPY. But so we have this nice push back up. Typically, after that first push back up or the first pull back down, that's typically a really good entry point, right? So as we get this first leg push back up to the upside, that's typically the one I want to short. I'm not too interested if we drop and then come back up a second time or a third time, right? More interested in that first time. So then I started looking at a 3-minute time frame, and I saw this 3-minute candle right here, and I was like, okay, we came up to 70.7. We had a nice little doji. The risk to reward is there. Let me put my stop loss above 376.8 when we ended up entering the short position. So it ended up working out. However, it didn't actually hit our stop loss up here. I actually ended up exiting this position early because I did not like the price action. So the max stop on this trade actually wasn't even hit. So if we look at the 5-minute time frame, why did I say I'm getting out of this position? Right? If you guys traded it with me, it didn't go all the way up here by the time we stopped out of the trade. It was like right here that we stopped out of the trade. Reason I didn't like it is because price came back, tested the 21 EMA, and found strength off of that level. That's not what we wanted to see. We would want to see price immediately break through and start coming down and testing that VWAP that we were talking about taking our first trim. So because I didn't like the price action, honestly, wasn't really liking what was going on right here either. That's why we took that very small loss on QQQ. So 2 very small losses today, and then that quick little scalp on SPY. Nothing crazy. Now, the trade that I didn't end up taking, but honestly probably should have, just because I wasn't liking the overall higher time frame analysis. We're chopping all over the place. Direction to me right now isn't clear, but this is still a really good setup. And again, we've been talking about this specific setup multiple times. If you guys have been tuning into these webinars, I showed it to you guys. We've traded it. We traded it on QQQ last week. So, and I talked about this in my live stream as well this morning, what I was looking for. So what I was looking for was a liquidity sweep below Friday's low, right? If it were to start breaking below, I was looking for it to break, come back up, reclaim the level. Why is this a liquidity sweep? Who can tell me? Anybody? I actually have I think I might have a video about this that I'm dropping later. I think I put it on my YouTube shorts on yesterday on YouTube. Why is it a liquidity sweep though? What about the level makes it liquidity? Maybe people who are getting long here on this higher low, or this equal low, or this equal low, or this low have stop losses right below here. That would make logical sense, right? Get that out of here. People who are getting long here, where their stop loss is more likely going to be right below here. People who are looking to short, some people like to short below the previous day's low. So if you have not buy stops, but these buyers with stop losses down here getting hit, they become sellers getting liquidated. People who short below previous day's low, and then where's their stop loss? If price starts reclaiming the previous day's low, right? If it comes back up above, what are they going to do? Get liquidated, get out of the position. So that's a liquidity sweep. An area where where the buyers have their stop and the sellers also are getting liquidated, both of them, right? So price does that, reclaims it, has a nice push to the upside. This to me, I personally don't like just longing the liquidity sweep and reclaim. What I like to look for is an FVG, which you can see ended up happening right here. Again, I don't want to talk too much on them. It's somebody else's concept. I'm not going to teach it, right? But here is the FVG. So have it right there. What you're going to look for, again, given a different market condition instead of today, because I don't like this price action, we are looking for price to come back into the FVG to then get long entries. Here's a nice little tip that you can use to get a better understanding. Jesus, I don't even know what I was trying to say there. Here's a tip you can use to get a better understanding on where in the FVG do you ideally want to get long. Take a Fibonacci retracement, measure the high of the that first candle to the low of the third candle, and ideally you're watching the 50%. So pretty much just a halfway point in between the high and the low. That's why you can see I had this marked long and then stop right there. So as price came down, as you can see, we have price reaction out of this area previously. That's why I wouldn't be interested in shorts at all in this scenario, because wake up, wake up, wake up, wake up, come back down, hit the 50% fib where you could have went long with a stop loss right below here. So in reality, you are risking about, let's go ahead and delete that Fibonacci retracement. 15 points of on NQ, so 15 times 20, whatever that is, would be your max risk. And then what was your first price target? Liquidity up here, liquidity up here. First price target, second price target. So that's been a new setup that I've been adding to my arsenal. But again, just given today's market, I wasn't necessarily willing to put that risk on, and I already took 3 trades. So I was like, okay, I'm just gonna, chill for the day. But that is that's a setup I've been playing around with, and honestly, I really like it. It has a very high accuracy rate.